Tomorrow's weekly expiry could wipe out careless traders or make the prepared ones serious money. Hey guys, welcome back to Your Nifty Guy, and I hope all of you are doing well. If you are new here, make sure you hit that subscribe button right now because every single day we break down pure price action and come prepared for the next move. Now, in today's video, we are going to decode what actually happened in today's session. Was it smart money positioning or just another trap being set? And more importantly, we'll build a clear, actionable plan for tomorrow's expiry with key levels, possible scenarios, and exactly how to react when the market opens. Also, if you find value in these daily setups, don't forget to like the video and drop a comment. It really helps the channel grow and keep me motivated to bring this every single day. Let's get straight into the charts. Now, today the opening was extremely favorable, and if you look at the markets opened near uh, Thursday's high, and we had planned a long trade above this particular, which was the Thursday's high with a pullback. Unfortunately, the markets had other plans, and the markets did go down a little bit. This was another zone where we had planned to buy the markets, but then again, the markets kind of reversed before hitting these levels. Now, that is a high probable thing because I'll quickly explain you guys what it means, right? So yeah, this is what we had planned. So we had marked the point 5 to point 618 zone of this entire up move. Now it is not necessary that the market will always retrace all the way back to these levels. The markets can also reverse from the higher levels. So it is just like the retracement has been just of a 38.2%, which is the maximum which it did today. And of course, this is a level which I pay more attention to. This is the more high probable zone because out here what it does is market gives a good retracement, and then if it forms a good reversal, that's a good setup. It is a much more higher probabilistic setup, and that is the reason why I specifically mark out only this zone. Otherwise, I could have actually also kept the entire Fibonacci drawn on the charts, but then I only simply mark out this particular level on my chart because this is what I have observed, that this is a high probabilistic zone, and I always wait for markets to retrace at least till around these levels. Now, lost a trade opportunity at the start because, of course, market did not break out immediately after a flat opening, which looked high probable. So even after coming down to these levels, if the markets would have broken up above these levels and after a pullback, we could have entered into a long trade as well as we had all planned earlier in the last video. But then today again, it was a no trading day for me. Post a base formation out here, markets did go up eventually. And if you observe, all the moves which came in on the higher side were fueled with liquidity. So out here, I'll quickly explain what taking liquidity means. If you observe, markets broke down below the previous day's low out here, and then the up move started to come, right? But then do you actually trade this particular move right around here? As a structure based trader, absolutely not, because till around this time, the structure was still a higher high, higher low on a 5 minutes time frame, right? I'm not talking about the bigger or higher time frame structure. We trade intraday trades only on the 5 minutes chart, and out around here the structure was absolutely of a lower high lower low formation. So we needed this particular high to be taken out, which actually happened here, post which if you look, another higher high was formed, and before the markets actually gave a good momentum based move, the markets swiftly took out this low with a big red candle inviting fresh new sellers and then immediately taking in their stop losses out here. Yes, this was a good trade setup which could have been traded wherein markets gave a closing above uh, the day's high as well as the previous day's high which we had marked, gave a good enough pullback as well. But then again, keeping in mind that the market had actually already moved quite a bit, although yes, the VIX is high and we can expect wider movements in the markets right now, I wasn't willing to take a risk out here. And that is absolutely okay in case if you are not prepared for taking that particular risk on that particular day. uh, it's good to wait it out. Otherwise, it could have been a good trade here as well. But then out here, when this particular move was coming in, although the India VIX did close in the negative today, but it had opened higher up today, and then slowly and steadily it was also uh, kind of decreasing, which also had an impact on the option prices. So yeah, it that's it about the today's price action. Now again, tomorrow is the weekly expiry, and my usual disclaimer: if you are trading Nifty and you are trading tomorrow's expiry, make sure to shift your entire trading to the next week's option, right? Options which are expiring next week. You might be paying a slightly higher premium for your entries, but then you will be doing yourself and your capital a much needed favor. So yeah, only the Hero Zero trades that we take post 2 p.m. based on the change in open interest is something that you can plan in tomorrow's expiry. Other than that, rest of the trading throughout the day should only be done in the following week's expiry, right? So now, if we have to plan for tomorrow, first we'll be deleting this. We'll be deleting this level. It has already done its job. Now on the daily time frame, we did form a good candle today wherein the high is higher than previous high, the low is higher than previous low, as well as we're going to closing above not just the Thursday's high but then also the Wednesday's high, right? So right now the structure kind of looks like it is forming a base, but then again this has been a good trend line wherein whenever the prices have approached this trend line we have observed steep fall in the prices, right? And is that is something that we experience tomorrow. So tomorrow's price action will again be very important. Either we are so the only possible scenarios can be either we are breaking out above this or we form another trap. So tomorrow actually is a good day for markets to initiate traps, right? There are multiple reasons which I will be explaining shortly. Number one, we are near a trend line resistance. Now, whether we break out or we take a resistance and we fall again, that is something which only time can tell. Second thing is that we are also nearing a important resistance of 23,000, which is a round number, right? So for tomorrow, what I will do is number one setup that I will be looking at in the day is I will not want to buy a breakout. The reason being we are near a trend line resistance, we are near a round number resistance, right? So when round numbers act as good, strong supports or resistances, when it depends on whichever direction you are approaching it from. And then if we form a good we need a flattish opening at the start. So this is setup number one that I will be keeping an eye on right at the start. We need to have a good flattish opening, post which I need a good bullish candle which gives us a closing above today's high, which will mean that fresh buyers have entered. And whenever the low of that candle gets taken out, whenever immediately or shortly after it breaks up out above today's high, if the low of that candle, bullish candle, gets taken out, that is a scalp that we can take on the short side, right? So this is will be my number one trap scenario that I will be planning. Now on the 4 hourly or hourly chart, I think will be if we take into account the 4 hourly chart, we are getting different swings, right? So if this is the 4 hourly chart, this is the 0.5 to 0.618 zone, which is much below, but we have a clear swing on the hourly chart. So, and that also coincides with today's low and today's high. So this is a much more high probable setup and will give us better levels. So we'll be once again marking down the 0.5 to 0.618 resistance. Sorry, the fib levels. This will be acting as a support. This is the 1 hour fib, right? Coming back to the 15 minutes time frame. Now, even if I have to play the bullish structure, wherein, of course, we are seeing the change in structure, I will not be willing to participate too much in a trade which is a breakout based trade. Of course, if we are planning our breakout based trade, we will be waiting for this particular trend line to be broken out, and then with a pullback only will we be entering into this particular trade. Uh, Otherwise, what I will wait for is a dip and around these levels, which I am more comfortable with. This is where I will plan to buy or take a trade on the long side. Apart from that, if we open with a gap down, we will be using a short trade or taking a short trade only below this particular level or at the open, right? So this is the possible scenario or the trade setup that can be planned for tomorrow. Now, right now, the markets are actually moving uh, a lot based on not just technicals but also geopolitical issues and tensions. So tomorrow, I believe, is also the deadline that Mr. Trump has given to Iran. I don't know if he had extended it further. Right now, it is getting so extensively. I have no words to put it, but then it is extensively getting so frustrating as traders, wherein there are comments from world leaders like Mr. Donald Trump, and this war issue is not taking any signs of slowing down. Whenever there's a news from the USS side that we are approaching a ceasefire deal, Iran denies it, and whenever there is a tweet from Mr. Donald Trump asking Iran to immediately open the Strait of Hormuz, and Iran is putting up memes where it is kind of making fun of Mr. Donald Trump. I do not know when exactly will we see the end of this, but then whatever it is, uh, this too shall pass, just like everything else in the world of trading. And what we can do is, as traders, we will keep ourselves positioned in a way where until the time things are not clear, will not be 100% portion in the markets, right? We'll be going in with smaller quantities only, and not be completely deploying the capital or the usual quantities. Another thing for tomorrow that guys should be keeping an eye on is if the up move continues, right? If the market is kind of forming the base and the up move is continuing, we need to keep an eye on the India VIX, right? If India VIX is kind of plunging down tomorrow, looks like a good head and shoulder information on the VIX chart. If India VIX is plunging down, even if we are in the right direction, we are taking long trades. Maybe we'll not see the options giving a good move, which the spot is showing only because of the drop in India VIX. The premiums are already super inflated, and a drop in India VIX could actually be kind of uh, taking bringing the premiums to their actual value, and then we might not be seeing that particular move that we are expecting. So yeah, that is something that we have to keep in mind. Absolutely keep an eye on the India VIX during the live markets. Do not simply pump in your trades by looking at the spot price, because entries made at higher VIX, especially as option buyers, if the VIX falls down, it is extremely negative for us, right? It is good for the option sellers, but extremely bad for option buyers. So yeah, keep an eye out on that. All right, so that's the plan for tomorrow's weekly expiry. Now it's all about execution. Remember, in a volatile market, it's not about predicting, it's about reacting faster than everyone else. If you found this breakdown useful, make sure you hit that like button. And if you're serious about improving your trading, subscribe to the channel, because we do this every single day. No fluff, just pure price action. Drop your view in the comments as well. Are you expecting a trap move tomorrow or a clean trend? I'll see you in the next one. Till then, trade smart, stay disciplined, and let the market come to you. Cheers, guys, and thanks for tuning in.